Hi there, I'm Karen,
And I'm Michael.
and welcome to our September 2020 market update. And we are going to cover the sales for the month of August of this past year. Um, and if you have any questions, just let us know. We're here to be your source for information. So let's go to first Guilford County and get all the numbers and the sales and what happened in August with Guilford County. This will just come up. First of all, number of new listings, we were up 0.24%.
Yay! Actually went up.
I know. To 853 homes, new listings. The number of listings for sale or homes for sale went down almost 31%, to 1,406 homes. That's not very good.
That kind of takes the bloom off the rose.
I know, and especially when we look at the number of homes sold, went up 731 to 731 homes, is 0.7% from last year. This is fabulous, though, for all of you home sellers or home property owners. The average sales price went up 258,799. That is 16.7%. We're going to talk about that a little bit later in our report here.
Well, not long ago, we were talking about the average home price in Guilford County cracking 200,000.
Yeah.
And now it's over 258,000 during
Right.
the month of August.
Right. And the number of new pending sales was up 27% to 547. So we had a good year or a good month in Guilford County in the month of August.
So we show you a similar slide every month. And this comes from our friends at Showing Time that we all use as agents to make appointments to show buyers homes. And it's the same V curve that we've been talking about since May. You can see the first of the year. Remember how excited we were, January, February, business to sale, all these showings. It went down during the COVID startup because we couldn't even show homes then. And now it continues to trend up in activity with buyers.
Let me see if I can get the next slide here. And this is also an indication of how the market is. This is a week over week difference of the people making applications for a mortgage. Of course, we see here, this is where there was a lot of buyer pent up demand. Last, I think, is that, oh no, that was the end of June. And then we have July 4th week. A lot of people went to the beach, and then school starting. But it kind of goes up and down. But this next slide is the year over year difference. Even though week over week, we saw a little slight slowdown, year over year, we're still ahead, where this about 28% more purchase applications for homes for a mortgage the end of August
versus
than there were last year.
Yeah, it's significant. Same thing on the pending. This is the week over week look at the pending sales. And same story. There's the tracking is almost identical to the applications. So you can see that it's up and down a little bit as we go into the fall. But when you go to the next slide again, here it is, 16.5% higher pending sales than it was August of 2019.
But one thing I want to point out, though, this is a national average. Guilford County beat the national average.
They whooped it.
Yeah, 27.8% pending deals for the month of August.
Oh, that's incredible. So, and then here is another national and then regional look at the business and buyer traffic, right?
Right.
So in areas like the Northeast, 76% up. We in the South were 46.7. But if you put the aggregate together, there is buyer traffic increase of 60.7% average over last year. I mean, that is just an enormous increase in buyer traffic.
That really is. And the total inventory was down 38%. Buyers continue to be motivated. This is from Danielle Hale, the chief economist at Realtor.com. Buyers continue to be motivated by low mortgage rates and strong desire for the certainty of ownership in an uncertain times. They're quickly putting offers in homes that come up for sale, driving the overall number of homes for sale even lower. And here, the Guilford County pending was down 31%.
No,
the
inventory.
We were a little less than the national average, but we were pretty close to it.
Right. And then more good news, if you're a home seller, is look at the forecast of home prices for the coming months and the last quarter of the year. Last month, there was the high water mark was 4.4, so that the highest forecast hasn't really gone up, but almost everybody's in the positive now. And if you look at CoreLogic, the second to the end at 6.6%. Last month, they were forecasting a decrease, decrease of prices of 6.6%. So everybody is definitely bullish on home prices as we go forward.
And this was major adjustment on the home prices year over year, right? Is that what this is saying?
The future home prices.
Future home prices. The forecasters in Fannie Mae last month, it was 0.4% increase. Now it's 4.4% increase in home prices. Zillow was -3. Now they're projecting 3.6. CoreLogic, which is just what you said, they were at 6.6. Now they're projecting a 0.6% increase in home prices.
So on the aggregate level, the housing economy remains rock solid despite the shock and awe of the pandemic. That's from Frank Martell, the president and CEO of CoreLogic.
Now, this is something talking about the forbearance, and the government in the beginning of COVID started this forbearance program to kind of allow people to defer some of their mortgage payments. As you can see, a lot of people did take advantage of that. Some of them are coming out of it. It's leveling off right now. And a lot of people are saying, well, this forbearance may lead to foreclosures and things of that sort. But then we'll get into another slide where they're saying it's really not the case because of the equity that everybody has in their home.
So the COVID-19 pandemic will lead to the rise in mortgage defaults. We know that's going to happen, and the foreclosures. But as the housing market muscles its way through the economic downturn, it looks as if the foreclosures will be a trickle rather than a flood. This is from Jeff Ostrowski, senior mortgage reporter at Bankrate.
Go ahead.
Okay, so let's look at this. This is what Karen was just referring to a minute ago. In 2012, 35% of the property sales that year were a foreclosure sale, distress sale. Look at where it is right now, if Karen will point that to it. In the month of July, only 1% of all property sales were distress foreclosure sales. So it's not time to panic or say the world's going to come to an end with foreclosures, but we're going to watch it, right?
Right. It's just something that we need to keep an eye out on. But right now, they're just saying it's just going to be a trickle, not the explosion like we did 10 years ago.
Yeah. So this is from Black Knight Mortgage Daily News. Those shopping for a home can afford 10% more home. Listen to that. 10% more home than they could have just 1 year ago while keeping their monthly payments unchanged. This translates into nearly $32,000 of additional buying power. Hence the move up in prices because people can afford a more expensive home without paying more for it on a monthly basis.
And this just goes to show that why the more and more people, about 6 months ago, 85% of the homes were 300,000 or less. Now it's 400,000 or less. People are buying, they're able to move up because they're able to keep, well, I think we even have something about this, don't we?
Yeah.
Go ahead.
Okay, so this is from Doug Duncan, who's the chief economist at Fannie Mae. We believe housing will continue to be a sector with relative strength amid the larger downturn. The recently observed increase in purchase demand is largely due to the pent-up demand
Yeah.
as buyers are acting now after delaying purchases in the spring. We are, however, seeing some early signs of shifting buyer preferences to locate to lower density areas, which will potentially be driving more additional purchasing activity.
Mhm. And the reason that is because a lot of people are working out of their house and they're only commuting an hour or so,
Maybe once or twice a week.
instead of every single day. So they're willing to make that hour commute once or twice a week instead of every day. So the buyer demands are changing. And then finally,
Yeah, so this is a great way to wrap it up in terms of numbers and forecasts. So Young has a forecast that existing home sales will ramp up to 5.8 million in the second half of this year. And that rebound would bring the full year level of existing home sales to 5.4 million, an actual 1.1% gain over 2019. But just as importantly, he's forecasting not 2021 home sales will be increasing between 8 and 12% more. There's the number over there in the green. That's a significant forecast.
So not only is the market projected to do well the last half of this year and the last quarter of this year, but also heading straight into 2021. So kind of let's give a summary here. The market is settling out above where it was last year.
Right. Lots of questions about what's going to happen with forbearance because it's kind of uncharted water.
Right. So we're just going to keep an eye out on that. But the real story is affordability and growth in the fourth quarter heading into 2021.
Well, we hope you found this to be helpful and informative. And as always, if you have anything you need to know, check in with us, text, email, or call us.
Yeah, we're here for you.
Thank you for listening.
Thanks. Bye.